because you never know when the real turn's going to happen. So you could have, a bias in the market for something bottoming or topping and get false starts. And no one ever knows when they're putting on a position if it's just going to be good for a scalp or it's going to be good for a swing or position trade. So you probe, you take partial profits, you protect, you tighten up stops to break even, and you can even make money when you're wrong the market before the turn if you have that kind of mentality. So, in honor of it being the hi, Paul, how are you? Ping pong. Don't hit any into the net today. So I thought, in honor of spring, I might do this. It's now or never. You should subscribe. Join our trading family so you'll know how tomorrow will be too late. It's now or never. The markets won't wait. Who just signed up? Give me a Y if you just signed up. All right. So, my philosophy is read events, trim down your positions. Stops are meaningless for a while. So the whole market's expecting some type of dovish type of Fed. So the risk is really if they don't give the doves enough. And if they give the doves plenty, a lot of it might already be priced in. So just guessing, I'm thinking that even though we had a pullback in the S&Ps yesterday, maybe there's a chance that we could retest it. I know some people that I follow were looking for 28.45. I've seen people calling 28.78, and this 4-hour chart confirmed in the S&P. So we'll see what happens if we get one more high. NASDAQ, similar situation. Very interesting. Remember earlier in the week, I talked about a line that I had in the gold that had come into play a few different times. Was talking about the break here, the back test here, had another back test here, and it's holding the moving average. If gold gets back through this line this time with confluence on the moving average at 1310, there's a pretty good possibility there's at least 1322 in it, 1320. So if you're a gold bear, you're making your stand here. Okay. If you're a gold bull, this is where you want to see the market close above. So that's my look in gold. Really, not a lot that I want to do before the Fed, looking to react to it. In fact, Ben Maldonado's in the house, and it was a week ago last Monday. I was in bearish ETFs on the Qs, and Ben came out with a call that both the market and the crude had bottomed, and they were spot on. So, how about that, guys? That great traders come to hang out in face, and he's not being interviewed today. I think it's because he likes the content, and it's probably because he believes in masterminding, which is what we do every day here in Face for free and all day long in our members chat. So, take Elvis's song, "It's Now or Never," because that's all we have anyway. You could say, well, maybe down the road. Well, who knows what's down the road? Who knows? You let go of what happened yesterday. Now is the key word. Next is the key word for traders. So now and next become part of our trading family here at ForexAnalytix. I guarantee you won't regret it. I haven't. I'm looking at our 2-year anniversary coming up in a week or so. And people that have followed me for a decade or so have commented that my hit rate has gone up. And my hit rate has gone up because of the company I keep. every day. So phase is the tip of the iceberg, and you want to immerse yourself with these pros. Also, you want to go to talk to our sponsor, Jason and Trent, so that you could learn about our reimbursement program or get a check every month. So you just go to that, and these guys are not going. You're not going to go through a million phone prompts, and they're a broker of brokers. So no law against having more than one account. In fact, I think it's a good idea because you don't know if you have a good racehorse until you run it against another. So I think you could say the same thing about brokers to suit your needs. So give Trent, Justin a call at Forest Park FX, and wondering what Blake went to a spring training game to see. I think the Padres were there. Where was it, Blake? In Mesa? I know there's so many teams that have spring training out there.
Yeah, it was is that talking Stick, which is what's the name of the field? Yeah, I mean, I guess it's Talking Stick Field.
Okay.
Salt River Field. Sorry.
Oh,
Salt River Fields. Yeah.
Okay.
So, yeah,
Gotcha.
it's a nice complex. It's a lot of fun. Our next door neighbor and very good friend, she was singing the national anthem. So so we're like, oh, it'd be a good night to take the kids out. I mean, the weather was perfect.
Yeah, you got to take advantage of that now, bro.
Yeah, we had some great seats. They were so inexpensive. I mean, we were almost right behind home plate, and just a couple rows back, and the tickets were very, very inexpensive. Definitely not regular season ticket prices. It's so fun. Spring training games are great just because the weather's so awesome.
So I know you're not. Every once in a while, you put the pedal to the metal for I've heard you talk about this when you really have something. Sometimes it's one trade, one trend that you latch onto and press when it's working for you. Any potential home run balls that you're focused on going into the Fed here today, buddy?
Well, I got stopped out of a big position yesterday. I was long the dollar Canadian. It took me out, as it stopped me out below this support here. And it's very frustrating because we're right back up again. And it was a total stop run, which is pretty indicative of, this type of market. You just, I got stopped out and popped right back up. It's so frustrating. And I didn't chase it back higher yesterday, which I could have, but I, decided to take it easy. Being the market is so, it's very illiquid and there's not a lot of great trends. So,
okay, it's hard to find something like that to latch onto right now. Someone tweeted me, I'm going to interview a mystery trader, and he's forecasting sideways currency action for the first half of the year. I wasn't happy to hear that. Hope he's wrong, but he's saying it could be frustrating for currency traders the first half.
Yeah. Hey, by the way, the cable's under some pressure here. Yeah, and so look at the pounds, starting to come down a little bit. So one of the things that and May just Theresa May is seeking an extension for Brexit. So that's and watch the euro pound here. The euro pound, we've had all this time to go down, and below 86. I played it on the short side.
You milked it, man.
I did. I played it a couple of different times, but it's had all the time in the world to break down, and we haven't. And so, we could start squeezing here in the euro pound. We get above 86.50, and that could really start squeezing.
I think Andre, who does our harmonics, Blake, a week or so ago, he was looking more towards the long side in euro pound, and his harmonic patterns were starting to shape up. So I don't know if he has a pattern in play on it, but
I don't think so. Yeah.
Okay. All right, but he was talking about a potential low here and then a pretty good move. So just something I remembered.
So we again, I'll go to the weekly chart here. Let me get rid of this arrow because the arrows kind of these arrows don't stay. Um, so if you look that the pound had this ability to break down. We had a big
Right.
double top, and the failure to break down could lead us to a nice little squeeze. And I've been
Who would have known with a weekly close like that, like before
Yeah,
this
well,
week? You know what I
it's
mean?
Brexit. It's
Yeah.
Brexit. So obviously anything can happen, and things are happening right now that people don't really. You're like you get whiplash back and forth, um, thinking one thing's going to happen, then excuse me. Sorry, I'm still getting used to waking up early, and plus I did get to bed kind of late last night for me.
Uh,
Um, I think that yawn and just came out of nowhere. So I would be real careful if we start getting above like this 86.50. But yeah, with that weekly candle, it looked pretty bearish, and then all of a sudden, here we are. Just reversing. Hold on, May time for Parliament to face consequences of decision. Ooh, yeah, that's never positive. It means consequences of decision. Well, a hard Brexit might actually be the way we go, and then that would not be good for risk or anything, for that matter. But let's talk a little bit about the euro dollar, because the euro dollar is it's catching a bid. We're real close to the 78% retracement. We're actually probing a little bit of this downtrend line here, and this is ahead of the Fed. Now, Dale asked me just a moment ago, what would be a good trade if, for later today, in the event that the FOMC is dovish. Okay, I'm assuming the euro dollar is going to continue to break out, but the problem is that most everybody's expecting the FOMC to be pretty dovish at this point. So the question will be, are we going to be able to build on this move higher? I mean, you have to keep in mind the 200-day moving average is not too far away, but will it be enough to dislodge us from this nasty low volatility environment that we've been in for so long? I mean, you look since November, we've been trading in the 114.50 to 112 range for so long. It's like, are we going to have the gusto to really break out here? I'm hoping so. I just want some volatility. I mean, that's all any of us traders want. We just want a little bit of volatility to rear its head. But right now, it's questionable. Now, if the Fed is unexpectedly hawkish, then you got to start looking at currencies like the dollar Canadian. They gave us that false breakdown last night or yesterday. I'm going to have to look at it as a possible long again if the dollar starts rallying. Could we get a move above 133.70 and start completing this inverted head and shoulder pattern, which I think is still valid. So it's hard to gauge at this very moment. But I think that there are things to do if you're dollar bullish or you're dollar bearish, depending on how the Fed comes across. If the Fed comes across more dovish, then the euro, I think, is a nice squeeze candidate. A lot of traders are shorting up against this trend line, shorting against the 78% retracement. I mean, we could see a squeeze above 114, maybe 114.20, and then the momentum, the squeeze momentum might start a little bit more here in this particular pair. I mean, I think that's possible. I think the cable's off limits for me. And probably for most of you guys and gals right now. I mean, there's not. Why are you going to trade the cable at this moment? I don't. 130, 130.60 is support. in this wedge. We all know that 133.50 to 134 is resistance, and we're right in the middle. I mean, we're just kind of nudged right in the middle here. So I don't think there's a good risk reward at all trading the cable right now, where it's currently sitting. Okay, the Aussie, the Aussie, we do have Australia employment tonight. So, if you do trade the Aussie dollar because you are bullish or bearish or whatever the case may be, if the Fed is more dovish, and the Aussie might be a decent play to the upside, because if the Fed's more dovish, it's weak for the dollar, period. And then you have a situation where risk appetite should continue to improve, right, on a more dovish FOMC. So then the Aussie dollar to the upside might be a good play. The flip side to that is, if if the Fed is more hawkish, okay, then the Aussie might be a decent short, because risk appetite is going to get, it should get hurt, if the Fed is more hawkish. So the Aussie dollar might be a good short. However, we do have Australia employment tonight. So if you look at tonight, which will be tomorrow morning in Australia, but we have Australia employment data coming out at 17:30, which is 5:30 this evening. Well, that's 5:30 for me, which would be 8:30 p.m. Eastern. So that's the one thing that you have to be careful about with the Aussie. Same with the Kiwi. Kiwi's a very similar situation. We're in this triangle pattern. So you got to be a little careful inside of this triangle. And we have New Zealand GDP tonight, which might push us to the upper or lower end of this triangle. But I think you have to be a little bit more careful with the Aussie and the Kiwi today, just because that data is coming out a little bit later. So if you react, after the data, after the FOMC, and you just have to be a little bit more cautious if you're trading these. Remember, GDP comes out first in New Zealand, I think a couple hours before Australian employment data. So if you're trading either one of those, just keep that in mind. The Canadian, like if you're tuning in a little bit late, I'll say it again. I got stopped out of the dollar Canadian yesterday. I was very frustrated, but this is one of those things. If the Fed comes in hawkish today, which the market's not expecting, let's make sure that we're really clear on that. The market is not looking for a hawkish FOMC. The market believes that the Fed's going to be pretty dovish today, and that's from every bank report that I've read for the most part. If the Fed is hawkish, the dollar Canadian could be a good play to the upside, because the market would probably see some risk aversion, when you're talking about the equity markets. So if the equity markets slump a little bit, the dollar Canadian, after stopping out myself and other people that might have been on the long side here, that might be a decent play to the upside, especially if we break above like 133.70. All right, it's consolidated a lot overnight. The dips have been bought, which suggests to me that the market was probably, the market, was probably caught short down here, and so they've been covering the last 8 to 12 hours or so. All right, dollar peso. The dollar peso is actually breaking down. So we're breaking this multi-year trend line. The only thing that would turn the corner right now for the dollar peso is some risk aversion. But right now, the dollar peso is breaking down. Steve and Grega both were bearish the dollar mex on Real Vision TV last week. When they were in New York, they filmed it. Great call by them. It continues to drift lower here. The one thing that I'm going to caution you guys about the dollar Mexican peso right now is the 4-hour relative strength is extremely oversold as we approach these supports. Daily sentiment index is also a little high. It's not in extremes, but it's pretty high. So that's always a risk of turning the peso, the strength that we're seeing here. Also, you got to keep in mind always when you're trading emerging market currencies, if we get any type of risk aversion, that'll turn the tide in these really fast. Okay. Let's see. The U.S. dollar, Norwegian krona is not doing anything. Still bearish. It's holding on to trend lows. This is these are the trend lows right here. Stellio still has a nice little short in the U.S. dollar, Norwegian krona, and I think if we break through this low, then the 127% extension comes down to channel or horizontal support down here, which I think is, a realistic expectation for the U.S. dollar, Norwegian krona, especially with the dovish Fed. U.S. dollar, Swedish krona is under pressure. Now, this is a interesting chart. Let's go over to the daily chart. So once again, we've done this 3 times already. So you see the dollar, Swedish krona, this breakout point. We had stopped, retested it, rallied, stopped, retested it, rallied. False breakout up here thus far. We're retesting it. Now, I think if the U.S. dollar, Swedish krona breaks down, so let's say we have a dovish FOMC, then the U.S. dollar, Swedish krona is a good short. Oh, wow. Hey, by the way, the cable's under a little bit of pressure. Theresa May is speaking. And watch this euro pound, because this euro pound is starting to squeeze a little bit. We're starting to break out here. So that and I have to say,
good instincts on euro pound.
Yeah, well, the risk is here that again, the risk is that you got a lot of people that have been kind of playing the pound to the upside, thinking that there's going to be a nice wow,
they're dollar bears, but they can't get bullish euro, Blake. So cable was the currency of choice to be bearish a dollar, to me, is what I think was happening.
Yeah.
They didn't want to be long euro because of just a bias on the euro, and cable seemed to be because the EG was performing. So you're a dollar bear. What do you buy? And sterling was it shows up a little bit on the DSI, not as bearish on the pound as on euro. Me. Thank you.
No, and so you're right, and so everybody's been trying to play the pound. A lot of people have been looking for a favorable Brexit scenario. Thing that could really turn the tide, I guess, for the market is if there's no extension here and we end up getting a hard Brexit, which seems like the market's kind of going, hey, wait a second, this might actually be the case. And if that is the case, then we could see a possible downdraft in equities too. So keep that in mind. And I did the chart of the day yesterday, which was the DAX, and I'll just pull up the chart really quick. So we have this ascending wedge into this head and shoulder pattern neckline, and now we're attacking the trend line support, which we're coming really close to. So you got to be a little careful here with the DAX and with risk in general. If the market starts to roll over here, that's not just the DAX, but you got to watch the S&P after this prolonged move higher in the S&P. The S&P hit the 127% extension, and we come back below 2815, and that's not going to be a very bullish event for equities. And I think you got to be a little bit more careful with risk appetite in that type of event. So
but foreign bourses, Blake, are much weaker than the U.S. Equity market. Nikkei, same type of thing. Looks like even if we correct a bit here in the S&Ps, like say 38% of this recent run, some of these other exchanges look like they could take out, like the Nikkei, take out the low of the move that they made in late 2018, early 2019.
Yeah, so here's the Nikkei, and you're talking about the lack of recovery that that it's seen, and you can actually see that in the dollar yen as well. I mean, the dollar yen really hasn't performed very well. We've only retraced 50% of this move, where you take the S&P, we've retraced 78% of this move, or roughly
over. Yeah.
Yeah, so yeah, over 78% of this move, close to 88% actually.
Yeah, short the weak sisters.
Yeah, so exactly. If we see risk appetite rear its ugly head, then you got the DAX, you got the Nikkei, even the Russell 2000's trading a little bit heavier too. It's
another good eye. That failing to make a new high after that break from 2 weeks ago, where the Nasdaq blew it away, S&Ps blew it away, even the Dow did. Russell not. And remember last year before we peaked, Blake, everyone was going into the Russell because it was like the safe trade from a trade war because they're domestic issues, and it topped before the Dow and S&P several weeks before and led the decline last year.
Right. So, it's I think you got to keep an eye on some of these markets that are underperforming. But well, I'm gonna speaking of which, I'll let Steve and Stelios cover the other markets, so I don't take away all of their thunder here.
Worry.
So
I have a lot of things to talk about.
Okay, yeah,
unsurprisingly.
I never think you have things to talk about. So
yeah, that's one thing you never, ever, Blake, have to worry about.
Not with Steve. So good morning, Steve. Good morning, Stelios.
Good morning, Blake. Before you go, just some food for thought. I was thinking about that yesterday, actually, at some point that I was contemplating. A lot of people are paying very much importance to what the Fed has been doing by, in essence, using. Let's be honest. I mean, I don't think there is anybody that is actually monitoring what's happening with the markets and isn't more or less convinced that the monetary policy from the Fed is at a huge extent based on how assets are performing, right? So everybody's, of course, focusing on let's call it the Powell put, since we have Powell now. I think that what most are not thinking as a potential probability is, let's assume, Blake, that we do have a more hawkish Fed today. Okay, let's make that assumption. I think that in essence will put something that we haven't had until now so far, which is in essence also put a ceiling in the S&P. In essence, it will put a collar to the index. Why? Because I think that if that happens, then the market is going to start thinking the following. Okay, yeah, they have a put in place because the market's recovery is based almost exclusively on asset price increases. But on the other hand, they want to normalize, let's say, the balance sheet and rates as long as the market permits that. So when the market is going to be overperforming, they might be throwing in the mix, a hike here and there, or force them to keep the tightening of the balance sheet, in place, etc. So I do think that today is going to be important, because if the Fed actually signals that they might be turning more hawkish after just the only thing that has in essence changed is the recovery in the stock markets, then that means that the upside might also be quite hard to get from this point on.
Yeah, that's a good point. I kind of think the market's right here. They're not going to be hawkish. They're going to be a little bit more dovish.
I agree.
But let's just for our argument's sake, it would be. I think your argument is valid. So
yeah, I like it.
Your points are valid, actually. All right. Well, good luck, everybody, and Steve, Stelios, I'll turn it over to you guys. Hey, and don't forget to visit our sponsor, Forest Park FX. Remember, they are the reason why we make this, or this webinar is available for you. I know Steve is a client of Forest Park FX.
A happy client, I might add.
Yeah, happy client. He gets some nice kickbacks, since he's already a ForexAnalytix subscriber, obviously. So, all right,
Yep.
All right, guys.
When did you join, Steve?
Have a good one.
All right, Blake.
Bye, Blake.
You're a subscriber, huh? Good.
Oh yeah, I am.
Oh, you have a little skin in the game here.
I should. Oh yeah, you mean in ForexAnalytix? Yeah, a
Yeah.
little skin in the game.
How you doing today?
I've been better. Little dude had like pain in the ear yesterday, so he has otitis, so we had to take care of that. And I have a little bit of a vertigo. I think it's because all the
Traveling.
fatigue from the
Yeah.
trip, etc. Is hitting me now. Other than that, everything is okay.
All right. Well, it'll be easier for you to reverse in the markets with vertigo.
Yeah, actually, I have no complaint. I mean, my USD is doing great. So I still have that position, though, still in the S&P. But really, I'm not. I'm not worried about it. I mean, people keep asking me. I have a position, and I'm totally fine with it. I do think that the upside is limited. Blake very rightly so pinpointed yesterday. If you remember, we had this conversation even before I left. I've kept saying that this 11,800, 850 area here is a huge level for the DAX. And so far getting rejected from there. Also, the 200 daily moving averages there. I wrote all that as well in the end of week analysis. So I do think that this confluence resistance is going to be key, and so far the market seems to be getting rejected from there.
That's funny. Apple stalled. Almost looks like an identical chart, not as strong, but Apple stalled right at the 200-day.
Here it is,
as
by
well.
the way, since you mentioned it. Yeah, here is Apple,
Right around
as you see.
right around the 200.
I've been monitoring this rebound in the vast majority of stocks. So far, it's channeled. I have no reason to believe that it's not corrective for me. There's a key. I'm actually, I like this key area here near the 61.8. You can see it was previous resistance as well. Yeah, I mean, let me remove this because we already completed that. 200 DMA is just a little bit higher, 50% FIB, 200 DMA just above this resistance area and the 61.8. So I do think that the upside for Apple from this point on is going to start getting
tougher sledding ahead. Tougher sledding ahead here. Yeah,
absolutely. So yeah, I do think that we might get some sorting opportunity here. I'm not looking to be short Apple, just to make sure that I'm clear on that. I mean, I think there are better opportunities, but definitely an area of interest. If you for some reason want to be short one of the stocks, and I'm deviating now a little bit, but let me say that if you want to be short one of these tech stocks, there is no question in my mind that this move lower from NVIDIA after this huge parabolic move higher has been impulsive in nature. So I do think that NVIDIA is probably going to be underperforming. So I think that if you're looking for a Nasdaq stock to short, NVIDIA is the one you should go with. Currently testing resistance.
As the weakest recoveries of all the stars.
Exactly. As you see oppositely from Apple, which is at the 50%, it hasn't even made it to the 38.2. So I do think that NVIDIA is not really looking good. And once the whole market rolls over, NVIDIA is probably going to find itself, being the weakest sister once again. But, anyhow, let's go back to, our usual stuff, because I think we have quite a lot of things to talk about. I'm not going to go over the USDMXN. My thesis here. I think that the USDMXN can easily make it to 1860. If you haven't seen the Real Vision interview, you can go ahead and do so. But we have a lot of things to talk about ahead of the Fed. First of all, let's start by the obvious. What is the dollar index doing ahead of the Fed? And the dollar index is clearly on a support area, right? I mean, this is the 50 daily moving average. This is also horizontal support resistance area, and it's also the support of this ascending channel. So triple confluence of supports for the dollar, key level here, make it or break it. So we do get a dollar bullish reaction following the FOMC. That's a great area to be looking, for another move to the upside. But if we end up cracking below this area, I do think that the next stop is going to be at 95.30. That's the next area of interest, and I do think that the index probably will make it there quite fast. So it's not rare to see ahead of major news, major currency pairs or indices or whatever being on key levels, and this is not the exception. So DXY on a key level, and you know what to do from here. I mean, we break lower. I think there is going to be continuation. We rebound from here. From a technical perspective, that's going to be a perfect level for the bulls to see the index hold and be looking for more upside. Now, knowing that a big part of the index is the euro, it's also not a coincidence that the euro is almost at this descending trend line resistance. So the euro might turn lower if we see dollar strength from this level, which is going to keep it for longer within this larger formation. It's like a descending wedge, like a descending triangle, but nobody tells us that we're about to break that. I mean, the euro has done a magnificent job staying in essence more or less range bound since 9 months ago, roughly. And nobody says that we can't do that for another month, for another couple of months, for another 3 months, right? So obviously, everything changes if we do see a daily close above this horizontal resistance area and the 200 DMA, which is now here at 114.70, or if for some reason we crack through the 61.8 of the whole recovery, which is at 111.86. So these are the key levels to monitor. In essence, a 300 pip range from 111.80 to 114.80 roughly. As long as we remain, trapped in that formation, I would really not be looking to do something. Now, USD Swiss, which in a big extent is inversely correlated to the Euro USD. A nice rejection from a previous high, exactly from a previous high. Probably it was even to the pip, or almost to the pip. As I had said, this is a key formation to monitor, and I can draw it also here. Why? Because this is going to determine if this is going to be a bullish or a bearish formation, right? So if we do crack above this 102 area, I think there is a lot more upside for the pair. But if we make it to 98.50 and we break below it, I think that then we can be talking about a formation that has run its course and is breaking the downside, in which case I would be looking for a sharp move lower towards 94 cents, 94.50, if not lower than that. Currently, we are in the middle of this formation, so I have to say that I'm not even close to considering some trade here, but I know that a lot of people are watching it, so that's why I wanted to give my point of view on this. Now, Blake already covered USD SEC. I had quite a lot of analysis on USD SEC, but it's exactly what I was looking for. So Blake covered that. I don't think he went over the USD NOK, so let me show this. USD NOK also very close to an important level. Make it or break it as well. Simply because we are getting very close to this trend line support. This is the trend line support of this ascending channel. As you see, the market has been in this ascending channel since the very first days of 2018. So in essence, this is like almost like a 15-month ascending channel. And obviously, once you have a channel that the market respects for so long, and you get a breakdown from there, it's something that you should pay attention to. I wouldn't be jumping the gun on the short side, and there is only one reason I wouldn't be doing that immediately, because even if we break lower from here, there is a very key confluence of supports at 840. 840 has been a key area several times in the past, but it's also currently the trend line resistance currently acting as support from this huge corrective formation and the 200 daily moving average. So if we do crack this ascending channel, I would still be holding off until I see what happens from 840. But if this market breaks through 840 as well, I think then we can be talking about some big development here. Until that happens, you need to respect the possibility of more upside because, as I said, we've been in an uptrend for 15 months, and I mean, even if you followed Stelios's beautiful short position pattern in play, I think that ahead of the FOMC and ahead of some crude inventory data that we have later in the day, taking some profits here is a very, very good idea. I would definitely take 50% off and wait to see what's going to happen, following today's.
That's exactly what I've done. What I've done, and I've told the chat room as well. So
good,
yes.
good. Stelio, I think it's perfect handling. Adding to that, because we know how correlated it is to the USD NOK, I have to say that we don't have a determined development yet, but we start seeing some signals in the crude market that would be quite worrying for the bulls, being that if today we close negative, we are in danger of forming an evening star formation on the daily charts after touching the 50% fib. And if you go to the weekly chart and you look at this trend line that I have here in red, you'll
with
see
a
that
potential reversal week to the downside if it fails.
Yes, exactly. You'll see that if this week ends up being a bad week for crude, we're going to end up having a very ugly candle on a very nice confluence of resistances. Also, codes, let me add to you, look at the weekly RSI trend line, which is also currently acting as resistance on the RSI level. So,
and you have divergences on the 1 and 4 hour chart. So
yes,
the shorter term stuff is not confirming the recent push. I was looking for one more, always looking for one more jiggle, but that could have been it yesterday. So if you look at
regardless, as I said, not enough evidence to call it yet, but definitely enough evidence to turn you a little bit cautious about what's happening here with the crude market. Yeah. We've satisfied anyhow one final thrust out of this triangle, right out of this symmetrical triangle. So anyway, I look at it, and if you remember, I mentioned that a couple of days ago as well on Monday. I said that listen, crude might as well move higher towards 60, but definitely I think you should be very, very careful because we've already completed quite a lot of the objectives of this rebound, and this market is in danger of rolling over sooner rather than later. So combining that with the position of USD NOK and also with what happened here in the USD CAD, if you remember on Monday, I was quite clear that we have two possible interpretations with the USD CAD. One of them is that this was a triangle that broke to the upside, in which case we might have just retested it and move higher. The other one that might be a channel and we might have one more move lower. Intraday, and that's why I don't like to trade, based on what happens intraday. As Blake said, we did have this move lower that penetrated through this triangles resistance that had acted multiple times as support during the past few days. But on a daily closing basis, we never actually violated this trend line. So if we do see some US dollar strength following today's FOMC, this is also, as we said with the NOK, with the USD NOK, this is also a great level for the USD CAD to rebound from. So, this is another pair that you need to watch because it is actually sitting on a key level ahead of the news. Now, having to do with the cable, I think that Blake showed this. I lost the first few minutes of the show, but regardless, there is a bearish interpretation about the cable and has to do with this formation, which can be like a wedge. We did get rejected here from the confluence of the 50% fib and this wedge's resistance. So, I'm curious to see what happens if we actually move lower towards this area, because if we do break below, I'm definitely going to be looking for a continuation lower. Now, until that happens, I would still favor staying away from it. But I know that a lot of you are actually watching it closely. So I'm going to mention what I'm seeing, regardless and irrespective of if I'm actually looking to trade it or not. I'm
You're going to cover
seeing
gold. We're getting some
yeah.
questions on gold.
Yeah, that I'm seeing. That's what I was about to say. I'm seeing that we have some questions
Okay.
on gold, and unfortunately, they haven't. I think they haven't. Let me see. They haven't yet. They had a lot of things in the pipeline. They haven't yet published. I think they haven't yet published my other interview about gold. I hope they're going to do soon. Having to do with gold, I'm viewing this rebound as corrective. Even if this move lower proves to be corrective itself, I think it's missing one leg. So I'm viewing this move corrective. So I do think that there is a high chance for a rejection at either from the 50% fib or the 61.8% fib and another leg to the downside. But we need to see if that's going to take place. I still favor it, though. I still think that from a technical perspective, it's a very high probability scenario. So I still like gold to the downside. And the same deal with silver. Actually, silver, as you see, is even underperforming in this rebound what gold has been doing. So probably once again the case that silver is a preferred short if you're looking to be short, because both of them seem to be bounding, in a manner that's definitely not impulsive. Palladium on resistance as well. We've gone over it multiple times. Yeah, I mean it's a beast. I mean, they've been cornering this market for quite a long time now, and it is what it is. Platinum stuck still in this channel so far. Nothing impulsive in that, so remains one of the weakest metals. So I think
Do you
that
know anything about the use of palladium? Is it mainly for catalytic converters, Steve? I know you're a car guy. Is
in
that
a big extent, yeah. In a big extent, yes. Stellio palladium is used for what else?
Isn't that platinum?
It used to be,
palladium?
but platinum was so expensive. I think they went to palladium.
Yeah, palladium is twice more expensive. Palladium is actually now the most expensive of the metals, right?
Yeah.
I mean, it's at 1,600, so palladium is the most expensive at the moment. I mean, it's more expensive than gold.
I think
if I told you that
the other main uses is like electronics technology and I think photography as well. There is some use of it, but mainly in catalysts is the main use still. Yeah.
Thank you.
I have to check.
A little fundies here. A little fundies on the metal.
Speaking of which, we have to definitely cover the bonds, both bonds and the treasuries ahead of the FOMC. So having to do with the bonds, we did have a pullback. We're currently testing horizontal support area, quite an important one. Although even if we move a little bit lower, we still have this corrective channel that we can retest as support. So as long as we stay above it, I have to remain bullish. I mean, I have to maintain a bullish bias for the bonds. Now, having to do with the treasuries, and this is one thing I definitely wanted to show, having to do with the treasuries are still pushing higher. And this is something I wanted to mention yesterday, but unfortunately, I couldn't make it yesterday being here. I was extremely busy. It's actually what is definitely astonishing is the divergence we have between treasuries, or if you want yields, if we want to have a direct correlation between yields and risk. So taking as the benchmark for risk, which is considered the benchmark, the S&P, and overlaying it here, as you see, overlaying it with the yields, you can see that we have some astonishing divergence. Let me mark it. You see it between what the yields have been doing and what the index has been doing, right? What the vast majority of stock indices have been doing. I am 100% convinced that this cannot go on for longer. So you can have a debate about what's about to give. In my opinion, this is what's about to give the S&P. But this divergence has definitely to close, it has to close sooner rather than later. So this is another thing I'm monitoring and I wanted to show yesterday. Anyhow, nothing has really changed since yesterday, so it's still valid. I think it's worth paying attention, especially ahead of the Fed, because the Fed definitely has, the potential of moving risk along with everything that's dollar denominated. Okay. Let me see more questions. Can you go over, compare Euro-USD implied volatility with the 25 delta risk reversal? Does it imply prices should head higher? I would, Ben, I'm not sure if you're in the chat room. I would love to go over that on the chat room, but I think it's quite specific and, hard topic for the vast majority of the people to comprehend. So I have no problem going over that kind of stuff on the chat room if you're a ForexAnalytix subscriber. Please tell about crude and gold, already done. Hey, Steve, look at the potential head and shoulders pattern on Google weekly. Okay, sure. I mean, we can have a fast look on the Google alphabet. It's Google. Here it is. I know that this is the daily, but we're also going to go on the weekly. Yeah, I know what you mean. You can see it even on the daily. Yes, it is a potential head and shoulders formation. If anybody can't already see it, this is what our friend is talking about, right? But as always, a head and shoulders pattern to be a head and shoulders pattern, we need to see a rejection sooner rather than later and a move lower towards 1,000 because we have a very clearly defined neckline, if that's the case. And that's, also a very nice psychological round number, 1,000. So
you think we might get it right over here now? Okay.
So yeah, if we do make it down to 1,000, then yes, I believe that from a technical perspective, that's going to be a beautiful head and shoulders formation. Speaking of which, Google actually got fined for 1.49 billion today, I think, or at least I read it in the Financial Times today. Now it might have happened yesterday. I didn't notice if it was like totally fresh news or like 24-hour news from the European Union. So we might see, due to that, some kind of a gap lower today, if indeed that's today's news. Of course, that's far away from saying that we're going to move down to 1,000. I'm just, since we're looking at Google, I'm mentioning that as an interesting piece of news.
Look at Microsoft has really been the market that led it. The strength, and it's maybe you could take a look at it, Steve. It's looking a little heavy to me short term.
If you remember, Coach, a long time ago, I mentioned Microsoft as one of the markets in the tech sector that was actually holding much better than anything else. I remember specifically that I had mentioned that the only stock back then that looked really corrective to me, because many of the rest of the tech stocks were broken. But one that really looked corrective was Microsoft, and indeed Microsoft did make it. This is actually what we drew back then. Quite,
nice.
Probably was like a month ago that it looked to me like Microsoft wanted to break higher and push to new highs, and indeed Microsoft is at all-time highs. But I would be very, very careful because I think that this correction
might divergent.
Yeah, absolutely. Plus, keep in mind that usually you get a bigger correction before the last leg higher. So
looks
potential
like drive 2, Steve. I had it compressed. This is drive 2. Drive 1 was the September last year.
Potential targets here are, there they are, these ones. As you see, the extensions of this correction, 127% extension at 122, 161.8 at 130. So I would really not be surprised if we've already satisfied the minimum requirement of one more high. Let me say that. So theoretically speaking, we can roll over from anywhere. But ideally, I would want that to be from a fib extension. So the first important one is at 122. Now, if we get like a big reversal from anywhere there, I would be looking for more weakness following that. Don't forget that Microsoft had what we drew a long time ago, had a parabolic move higher, which came to an end, when everything started breaking down. And I do think that this move higher might be the last hurrah of this market. So despite being to all-time highs, I would be quite careful. I would definitely not be buying it here. I would be buying it on the initial breakout or at the retest, because as you see, this market acted perfectly. I mean, it broke out, it retested this formation and moved higher. Let me say here that it has been noticed multiple times from a technical perspective when you get a market retesting the breakout area or the breakout trend line, depends on what kind of formation you have. The implied performance following that is reduced, right? So as we saw with palladium, very, very strong markets, when they break out, they don't retest. Okay, so having a retest gives you an excellent risk reward opportunity to join a market. But on the other hand, it has been proven that a market offering a retest is not going to perform that strongly than a market that actually never offers you the opportunity to enter from a retest. Okay, so keep that in mind, since we're talking about the potential of seeing some kind of a top in Microsoft being not that far away from where we currently are. Of course, potentially it can be even at 130, which isn't that close. But as I said, 122 might even do it. Let me see if we have more questions.
Also, Steve, is who I'm interviewing from @_peculium in the house, and will you please write something so I could find you? Say hello, Dale. I'm here.
We have Zach asking about Euro-Swiss. What I have to say is that nothing has changed with Euro-Swiss. Euro-Swiss is trading at a very in a very technical way. So currently it remains trapped between this horizontal support area, roughly at 112, and this horizontal resistance area, roughly at 114.50. I think that as long as we remain between them, there is not much to do here. And, even the fact that the 200 and the 50 DMAs have converged that much, so that this market in essence is range bound, right? When you have like a slow and a rather fast moving averages converge, that's a good sign. And especially when they've started going horizontal as well, which we have both of those happening here in this market, it's another indication. I mean, an easy to recognize indication that this is a market that isn't in a rush to go anywhere. And probably if you want to do something with a market like this, it's range traded than anything else. Okay. So I have nothing to add for the Euro-Swiss. We have also a question about Nifty and Nifty banks. I have absolutely no problem looking at that. And if your guest is here, I think we can go to that afterwards. I have to say that Nifty has surprised me to the upside. I mean, quite a lot, because up to this point, this formation looked, strongly corrective to me. So I really expected one more thrust lower towards this horizontal support area. And once we started breaking down, we then reversed, and it's been quite strong. So I have to say that it's a market that might soon pull back, because daily RSI has almost made it to 80. But I have to say that the bearish interpretations have already started looking a lot less likely than they were looking when we were actually developing this ascending wedge. So a retest of the highs is definitely not unlikely. And Bank Nifty, there you go. Bank Nifty usually looks more or less the same. No, actually, it looks better. All-time highs here. So, you have to respect that and look for upside targets by having some extensions here. As you see, we've already surpassed the 127% extension. Next area of real interest, in my opinion, the 161.8% extension of this last corrective move, which is at roughly at 31,000. Now, obviously here as well, the daily RSI is almost at 85. So buying right here, right now makes no sense. But, a retest of the previous highs at 28,400 probably is something that the market is going to see as a nice buying opportunity. So I'm guessing that a lot of people are going to be jumping on the index at that level. Coach, do we have your guest here?
Let me try this one more time. Whoever is representing at Peculium, which is a savings platform for crypto, artificial intelligence, etc., can you please write something in the question box?
Let me also cover USD-SEC for a friend that just asked.
Sure, go ahead.
As long as you're looking. USD-SEC, this is what I'm looking for. First of all, we had that long-term triangle. I was very bullish because it was an obvious triangle, so I expected the continuation higher. But we are now at a key area as well here. I mean, we're testing a key area ahead of the FOMC because, as you see, after finding a high, we've actually developed an expanding triangle, or otherwise, as it's called, a megaphone formation. We're currently testing horizontal support area. You can see this area of support has been support and resistance multiple times in the past. But one way or another, you don't want to see a move below this area. So, as long as we stay above this triangle, there is still the potential. I mean, we can see a little bit more downside, but if we make it below this triangle, then we will be talking about a major failure after one last thrust higher. And very often triangles are continuation patterns that produce just one more high or one more low before a bigger reversal. So that's what I have in mind that worries me for the upside. But from a risk reward perspective, if you want to be looking higher, I think that the way I would approach it if I was looking for a trade here, it would be buying half a position here at this horizontal support ahead of the FOMC. If we make it lower, buying another half just here at the triangle, and then you'll have a nice average entry, which is going to be here, and an average position here, and a nice risk reward opportunity, because if you get more upside from there, fine. But if you then see a move below or a daily close below this triangle, or several daily closes below this triangle, I think we can be talking about a bigger reversal. Until that happens, you need to respect the upside, as I said. So, Coach?
Looks like we have a mix-up, Steve. So it doesn't look like there'll be an interview today. We do have Mark Chandler tomorrow. Mark's one of my favorite guests, and what a great time to have him after the Fed for
absolutely
his fundamental views and technical views of Euro and all the majors. So Mark tomorrow, and wrap up the week with a guy who's very popular in the crypto space, Crypto Don Alt. So nothing today, but I just want to remind everyone who's here, first of all, Steve, great to have you back. Your reviews are the best in the business. So just want to remind everyone as they're leaving here today that it's now or never for you to subscribe. Yeah, buddy.
Before singing, let me satisfy our friend here that
okay.
Actually, nice to see you, Forex Gal. We actually met in the expo.
Oh, wow.
Yeah, a very lovely lady. We had a couple of conversations. I just noticed that you were the one asking about USD-SEC. And we have a question about USD-INR. Let me say about USD-INR that so far we might just be in a corrective move lower. There are two possible interpretations. One, that this is a channel. The other one, that this is just, a pennant. So, I have both trend line supports here. Keep in mind, the reason why I'm looking at this initially as a corrective pattern is because I'm forced to, meaning this has been a very prolonged uptrend. So whenever you have a very prolonged uptrend or a very prolonged downtrend, you are forced to view any counter trend move as corrective initially. So that means that I would be a little bit careful, because if we find support at this trend line or at that trend line, don't forget that in between them, we also have the 61.8 of the last leg higher. I think you should respect the potential that we're going to have more upside. So I would definitely not be selling USD INR here. It has definitely shown some respectable pullback. I mean, we've made it from the 74.50 down to what is it, like roughly 68.5. But I would be quite careful here, because we're approaching several areas of interest for a continuation higher. So thank you all very much. We'll be back.
Do the tagline
Here
buddy.
tomorrow. Which one of all?
The
Don't just count your pips, count your blessings.
Good job. Okay, everyone. Good hunting on the
perfect.
Fed. See everyone in the chat room. So as a member, you're in the chat room for the Fed with Steve and Blake and Amanda and Joe and all the members, all the pros in there. So good hunting on the Fed. And we'll see everyone tomorrow. Mark Chandler is my guest. And thank you, Alexandros, Alina. You're very welcome. Have a great day and see everyone tomorrow. Thank you, Steve. Adios. And as Steve said, remember, don't just count your pips, count your blessings. And you, as part of our community, I count as one, big one. Adios. Let's have a great spring, new growth in our accounts this season. Amen.